And good morning, ladies and gentlemen. As it's Monday, December 24th, 2012. Happy holidays to all, and it is Christmas Eve. This is Options University, and it's Butch Shorak, and access to this video is for educational and informational purposes only. Nothing contained in this video, in website or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteed any profit. And with that, let's take a look and see what exactly happened last week as the indexes finally showed a little bit of a move to the upside. As we see, the Dow is up 0.4%, NASDAQ up 1.7%, S&P up 1.2%, and the Russell up 2.9% as we see that kick-in of the small cap stocks took place during the last week. As far as economic announcements coming for the coming week, let's take a look and see what it is that we have to deal with. Monday, nothing. Let's look at Tuesday. Closed. By the way, Monday is a half day in the market as the market closes early. Wednesday, little or nothing showing. We do have the S&P Case-Shiller Index showing at 9 o'clock on Wednesday morning. Coming to Thursday, we have our traditional Thursday morning weekly jobless claims report. New home sales also coming in, and consumer confidence are coming on Thursday. That's the big day of the week as we finally have some kind of economic announcements that take place during this holiday shortened week of only 3.5 days of trading. Most of the retail investors will be off of for the week as they have retreated to some of their family digs, and we see on Friday we have the Chicago PMI, pending home sales, and we see that all we have this week is moves that will take place toward the end of the week as far as economic announcements. However, this is the week of the famous Santa Claus rally. Will it happen? Will it not? What is it an indicator of? If we look back through history, we see that we generally have about a 1.5% gain on the market on those years where we get a Santa Claus rally, which is the majority of the years. What you want to do is you want to take a look, see what happens. By definition, we see from the Santa Claus rally that it occurs on the time between Christmas and New Year's and the first 2 trading days in the month of January. And what it gives you is it gives you an indicator. Remember, averaging about 1.5% gives you an indicator of what will happen during the next year. Why does it happen? May have something to do with the fact that the retail investors are gone and people are happy. May have something to do with a little rally after some of the tax selling that takes place. It also may have to do with, in general, the fact that the retail investors are on vacation and there is a time of happiness that takes place. You use this as an indicator to determine what's going to happen. It also might be an indication of a little optimism because we're coming into that January effect, which we will talk about as we get into the next year. So we don't have much of a week as far as economic announcements, but the real question is, will the Santa Claus rally continue? Looking at the SPX, we see that as we look at the overall week, we were up for the week, but we basically had our really big move early in the week, and then it just kept pulling back after that those 2 big days of the move, and then we ended up with a sideways move. So where are we in the overall market? What are we doing? Well, here's our 30-day moving average sitting right in this position right here. And so we see that looking at that 30-day moving average, that it really has not, it has started to turn up a little bit. So our overall trend, well, we've been in an uptrend since November 12th. If we look at our overall trend, we are basically in a bit of a sideways trend. Here's our upward area of the move, and here's our downward area of the move, and our 30-day is moving right here. And so we'll see whether we stall out and then get some downward movement after the first of the year. But at the moment, we could consolidate the rest of the week as we see we'll probably have lower volume and not quite so clear as to where exactly we're going. Our previous highs are up in there around 1475, and we'll see whether we head up to that or not. Currently we're in a down cycle as we're getting lower highs and lower lows, and so in fact let's take a little closer look at this down cycle. And we saw that on Monday we had a pop up on news. We continued on up on Tuesday as there was hope that the fiscal cliff would be solved, and we saw that what happened is that basically fizzled as time went on. The Republicans refused to vote on it as they did not have enough votes to pass Plan B, and then we consolidated for the rest of the week, getting lower highs, lower lows, but trading within a pretty tight range here. Where are we going this week? Difficult to tell as this fiscal cliff keeps looming over us and causing us some consternation in the market as to where the market's going. Looking at the Dow, what did it do during this week? Well, we bounced off that 50-day moving average, and we're almost went back down to it on Friday, and we're definitely looks like a sideways trend here on the short term for the Dow Jones. We are getting a down cycle we're currently in as we're getting lower highs and lower lows. Let's see if we get a little Santa Claus rally out of the Dow. Next, looking at the NASDAQ, we see that it had it looks like a bigger range as we were all the way down to the 30-day moving average, popped up with that news, and then pulled back rather radically. Did hit that 3,000, bounced off it. So the NASDAQ showing a little bit of strength on Friday as it hit that 3,000 and bounced back up another 21 points. So for the day, it was down considerably after that huge gap down by the NASDAQ on Friday. But all in all, NASDAQ doesn't look unhealthy, doesn't look any different than the rest of the market. A long way from its previous highs that were up there almost 200 points away. Next, let's take a look at the Russell 2000. This is our small cap stock. It has had a bona fide rally, which we would expect in the month of December, anticipating the month of January when there is that shift to some of these small cap stocks, and so we're seeing that typical run in the Russell at this time of the year. Let's take a look and see what kind of volatility we've had in the market. As we see that we had a bit of a pullback the last 3 days, we'd expect the VIX to run to the upside a little bit, and as our contrarian indicator, that's exactly what happened as the VIX pulled, headed up, and in fact this is not a chart of the VIX, but the VIX went up to 20 and then pulled back, so you might pull that chart up and check that VIX chart, as you saw quite a bit of movement in it, but still within our normal trading range on the VIX. Looking at the other sectors of the market, looking at TLT, which is our bond sector, we see that we've been pulling back steadily as the bonds have pulled back from some of those previous highs, and we see that compared to the last 3 months, we are at the lower end of the range. Did go down and hit support and got a bounce out of the bond market. As we see, it's sitting at about 122. Looking at the financials, the bank stocks and the ETF for that, the XLF, which is a Spider Select, we see that, needless to say, it's in a nice rally mode and went to new highs for the last 3 month period. As we saw a run in the financials as we went into the end of the year, as there's obviously been some accumulation of those financial stocks. Might expect good things out of that market this coming year unless we go into some type of recession. Is that possible? Well, the truth of the matter is until you get the fiscal cliff, we can't really tell which way the market's going, but certainly after we've had this run in 2013, end of 2013, beginning of 2014, maybe time for another recession if our politicians don't get their head on straight. Next, looking at the oil, USO, our ETF for oil, we see that it is trading within its range, at the high of its range at this point, and time to think about potentially looking for this thing to retrace to some of its lows. Not a big movement out of the oil stocks as we see it going basically nowhere. And then finally, our safe haven gold. Let's take a look at GLD, our spider for gold, and we see that pulled back. Not a lot of fear in the market, judging by where gold has gone, as we saw it come to lows for the last 3 months. And what kind of volume took place during the last week? Well, there's one way to look at that. Let's look at our spider ETF, and we see that we had big volume on Friday as we had that pullback in the market, and we see that we're getting lower highs, lower lows as to be expected, and Friday really had the biggest volume of the week as we see ourselves on basically an upcycle, uptrend in the SPY since basically around November 19th, and the spider is running. Where are we going? Will there be a Santa Claus rally in this shortened week? Remember, half day on Monday, off for Tuesday for the religious holiday, and then we'll come back and have 3 more days before the first of the year as we enter the second week. Will be the second row in the week in the month that we have a shortened trading time as we have the celebration of New Year's Day. With that fact, thank you for being here. For those of you that have gold membership, stick around. For those of you that like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. For that fact, this is Butch Shorrock wishing you and yours a happy holidays. This is Options University. It's Monday, December 24th, 2012. Shortened week this week. Let's see if we have a Santa Claus rally. Thank you for being here. And to our gold members, welcome back. Let's take a look at our stocks to watch. The first one we'll take a look at is Amazon. Look at this. Does this stock have a positive move in the overall market? You bet it does. 30-day above the 50-day, above the 200-day. It's one of the stronger stocks in the market, reaching very close to its resistance area. As we see, this level and this level are basically about the same. A little bit of a pullback as the week went on, but if we do have a Christmas rally, you could look for this stock to break out, and you might be able to pick up a bit of a move on a breakout with Amazon. Look for that volume. It also is another big indicator. Next, let's take a look at Apple. As we look at Apple, we see that Apple's showing us little or nothing, not really sharing in the overall, and again threatening that 500 level. As we see, we had a lower low between this day in December and this day in November, as Apple showing a great deal of weakness, not having the kind of runs that we used to expect out of Apple, not moving with the overall market and not showing us any great strength. Looking at AutoZone, we see it also is not showing us, trading at the lower end. If we see a breakdown in the market during the next week or so, we could see AutoZone move out of this zone, and then we could expect an equal move from 392 to 355 is roughly about 40 points. You may see AutoZone move down as it's not shown any strength since its last earnings. Next, let's take a look at CMG. Looking at our food company, where is it going? Nowhere. Did have a bit of a little breakout here, but having trouble moving very far in any way, shape, or form. If the market pulls back, look for this to pull back, and may even pull back on a 10% pullback. After the first of the year, we could look for around a 240 level out of CMG. Next, let's take a look at Google. One of those stocks that did nothing but run for so long now is showing that it has had some strength. Not one of the strongest stocks in the market, as it hasn't approached its previous highs, but nonetheless starting to look like that 30-day is heading up. Could get a crossover here, looking for a potential move for Google to the upside. Next, let's look at Green Mountain Coffee, which had very nice earnings and since then has been outperforming the market. As we see, soon to happen will be the 30 above the 50, which will be above the 200, showing us a bullish move on Green Mountain Coffee as we come into the winter season. May see more coffee being drank, as this company has showed us some of the strength it used to show. Of course, not anywhere near the price it used to be at. ISRG obviously had news, not looking very healthy, at the very low of its range, and any bounce in ISRG should be played to the downside. Looking at MasterCard, one of those stocks that was well taken care of by QE3, moving to new highs, showing great relative strength, giving us the 30 above the 50 above the 200, looking like a bullish stock. Could move higher as we head into its next earnings, and this is one of those stocks, if we have any kind of run in January whatsoever, should be one of those that will run. Keep an eye on this for a bullish trade. And next, let's look at McDonald's, which is showing us not very much, barely above the 200-day moving average. Certainly have a inverted bearish symbol stable as far as the way our moving averages are. Has had a nice move up since November. See that it's been in an uptrend, and that certainly could have been picked up. Whether this is going higher or not will depend upon next earnings. Keep an eye on McDonald's, as it is a company that has shown resiliency in the past. And Nike, is it just doing it? Had earnings? Did they like earnings? You bet they did. Did they do it with volume? Yes, they did. Look for the stock to move higher, as Nike had positive news on earnings, just looking at the chart. And finally, let's look at Priceline. Looking at Priceline, we see that it is going nowhere, showing us no strength, trading in a sideways range. Previous high for the last 3 months is at about 680, currently at about 618. Certainly has area to move to the upside, so that if you see this stock begin to give you higher highs and higher lows, you might be able to make a short-term little gain on Priceline. All right, and looking at WW Grainger, finally broke out of that lower trading range, heading a little bit higher, as WW Grainger is showing us some of that strength that it used to have, as it had really only knew one direction for quite some time. One of the stable companies in the economy, as they keep plugging along, selling whatever WW Grainger sells in our retail market. And then finally, this is Butch Shorrock. It's Options University. It's Monday, December 24th, 2012. As we draw this year to an end, on behalf of me and Options University, we want to thank you for your loyalty, for being here, and really enjoy working with you and your future. Butch Shorrock, happy holidays.